to the next panel that we have today. It's Step Change Through Fintech Innovation. And we talked about innovation. Yesterday, we realized why we need an innovation. And today we are going to discuss more what innovations are happening and what is a more, which is going to happen in this sector. So now the second panel that we have will be moderated by Dr. Muralidharan, who is the MD and CEO of NSCIT. On the panel, we have Mr. Nitin Kamath. I think Nitin, everybody knows you more or less. I think everybody who would be keen to know more about you, but just a quick introduction. Nitin is an avid trader in the Indian capital market for over a decade. And he, along with his brother Nikhil, he's founded Zerodha in 2010. India's first discount brokerage, widely credited as being a disruptive force in the Indian broking industry. I don't have to say much on the Zerodha. I think everybody is tracking Zerodha very closely. I am also one of them. They have also launched a broking as a service platform. I think Zerodha is one company we all know that have kept customer in the middle, and I created the entire offering. I think Nitin will tell us more about it. Nitin has also founded Rain Matter, who is an R&D in fintech incubator and a fund that invested in several fintech startups. So that's about Nitin. It's a quick introduction because it's a very long one for me to read it out. We would want to hear more from you. The second one we have is Sankarsan Banerjee. I think that's another name I think we keep hearing. I just read 40 applications in 40 days in the cloud. Amazing, sir. It's very good to know about some of the such initiatives which are happening in the industry. Quick introduction about Sankarsan. He is the Chief Information Officer at RBL Bank. He's an accomplished technology professional with over 23 years of multifaceted experience in the industry. His current role at RBL Bank, he is responsible for information technology, optimizing legacy IT systems, identifying and adopting innovation, and enabling digital transformation of the bank. Prior to joining RBL Bank, he was the Chief Technology Officer at the National Stock Exchange. He has worked with both sides of the divide, that is IT companies like IBM, Mphasis, and Accenture, wherein he had their technology, cloud, mobility practice for India, and user organization like Future Group and IIFL. So he brings, I think, what we talked about, one coin, two sides, business and technology. I think he'll be able to throw more light on that front. The third panelist that we have is Dr. Paresh Nath Paul. Welcome, sir. Sir comes with, varied background from the MCX. He has been, also worked with an NCIT's delivery head. And a quick introduction. I'll not take much time because we are losing time out now. Over to you, sir, for starting the panel. I think everybody is waiting for this panel. Thank you.
Thank you, Sheetal. And Nitin, Shanky, and Paresh, welcome to the panel. What I'll do is I'll quickly set a trend because I've gone through this entire life cycle of the capital market for the last 20-25 years. I wanted to tell some story before I give it to the three of you. 94, when we started, there was a big fight whether we should have a multi-screen fancy system or a single screen system. Given what it was in 94 with all fights, we finally decided a single screen system which created revolution in this country. And even today, with great difficulty, we moved some of those screens, and we, last year, I believe, we did shut down the neat screen, what was there for the last 20-24 years. If you look at that period of evolution in the market, the proprietary brokers, they used to have 200 odd traders sitting in there and doing this algo. And we keep getting creative in our own way. At some point of time, they started writing macro on the screens, and they started doing algos, small algos into the macros, and they used to do a screen scrap, and they start trading there. That is the second stage of evolution. The third one, we've opened up the API. We are talking about API economy, and in the exchange space, it is a little older. In 1994 or 98 or so, we opened up the API for CTCL players, and we had about 4 or 5 CTCL vendors who were building order management system, risk management system, surveillance for the market. And then then came the internet economy. The first internet introduction was a disaster for us. If you may or may not know that the internet was not that good in India, and it was a failure in the first round. And then we reintroduced. Then we started doing the three-way integration of depository and banking. And the next generation started with HFT, algos, and other things. Now, Nitin is here. I don't have to talk about the ecosystem, whatever is created and whatever is there today. This is disrupting the entire market. The fintech people are getting into platforms which can provide a pricing decision using artificial intelligence, and it can provide RPA, IPA, and ease of client onboarding and CKYCs, and machine learning in surveillance and device in investment strategies. These are some of the things what we are seeing, and this is available as a platform. This is available as an ecosystem for the complete ecosystem to use. That is what is a disruption, what Nitin has done in the market. And that is the next stage of evolution, what I can see in the market. And it is followed by people like Neo and others. And it'll be good to have a panel like this, one who has seen both sides of it, which is Shanky, and Nitin, who has created history by creating this platform, and Paresh, who is the CTO of the Commodity Exchange. And I welcome you all to this panel. And without much delay, I will start the panel discussion. Shanky, I will request you to go first, and I would want you to talk about the API economy and the new fintech disruptions, whatever is happening, before Nitin gives his actual thing about how he went about creating a disruption in the market. Over to you, Shanky.
So, fintech disruption is one of those, I guess people can hear me. Thankfully, fintech disruption, fintech innovation has been on everybody's minds. The big incumbent players, the middle level players, challenger banks like us, long established monopolies, long established regulators, all of them have started discussing fintech. And fintech is basically technology innovation for financial services. That's basically how everybody defines it. The reason it has become so important is because for a long while, in the financial sector in particular, the incumbents remain relatively protected by regulation, protected by a relatively small pool of competitors from each other, from competition. They became a bit complacent. They did not start any new offerings. They kept doing what they were doing. They had a market to themselves. They weren't growing very much. The equity markets, after the first initial round of innovation that NSE did, became a bit flat. The brokers didn't do too much innovation. The banks did not do too much innovation in the non-broking, in the regular financial space. And this was the situation for a long time, right? So then again, there's been a whole flourishing of fintech in the recent times. In fact, India is supposed to be the largest generation of fintech companies in the world. We are supposed, especially Bangalore and Bombay and Delhi, have become fintech engines. But all over India, I mean, we've seen Coimbatore fintechs, we've seen Bhubaneswar fintechs, we've seen fintechs from all over. It's become quite the challenge, and this has changed the game in two ways. One is it has started making the banks also much more aware of and much more aggressive about either competing or cooperating with fintechs. The second is it has led to a couple of very large changes. So the payment space has been transformed by fintechs. The capital market space has been transformed by fintechs, largely Zerodha and a few others. We have seen many such large step changes in innovation because of the fintechs entering the market and saying we can do things new. And I frankly think it's a fantastic thing. Incumbents will start to wake up. They will start to either compete and produce much better products, or they will cooperate and the overall industry will benefit.
Shanky, are you on? Or
yeah, I'm still on. So a couple of more things is, so as incumbents are ongoing, we have discovered, I'm a challenger bank, which means though we are a bank that's been there for a long while, we think of ourselves as trying to change the market in a banking space. We also realize that no matter how agile we try to be, we are nevertheless a large, full service bank with many different lines of business, a fair number of employees, and a fair number of customers. And we cannot suddenly shift what we do. We cannot take the risks that a fintech can. We cannot do some of the things, primarily because of regulatory requirements, that would be open to a fintech. So, as a bank, we have taken the option of uh, cooperating with fintechs. That is our line. We like to work with fintechs. We have set up a partner banking as a service program, which invites partners. We have now, I think, 75 partners. Excuse me. And we worked with these partners to enable their businesses, to power the financial side of it, to provide them with the regulatory mechanisms to manage money while they do the agile, risky, but service centric mechanisms. And that's how we deal with fintech. That's pretty much my contribution for this.
Thank you so much, Shanky. What I'll do is I'll start with Nitin, and then I'll come back to you with questions. Nitin, you don't need any introduction from me, and you are known for your disruptions. You are known for your innovations. You are known for the ecosystem what you have created, and the millennial loves you. What I would like to hear from you is where did it start? How did you go about it? And what are the new things what you have done? And what is there in store in the next foreseeable future?
Thanks. Thanks for firstly having me on this. About this fintech, I'll tell you the joke. Through my life, I used to trade the markets before Zerodha for 10 years. I mean, we have been called fintech over the last 3-4 years, but before that, people were telling me to go get a real job. In the sense, I mean, because I come from a South Indian Brahmin family, and I used to trade the markets, and people didn't acknowledge this to be a real thing that you're doing. But yeah, so around 2000, so we started the business thanks to NSE Now, right? As in, there was no way. I didn't really come from any tech background, so I used to trade the markets, and in 2008 we spotted NSE Now, and we realized that NSE Now was now faster than most of the other platforms because of proximity. And then that's when the idea came about. If there's a way for us to go disrupt on the pricing, right? Because yeah, so we started the business in 2010 because of that. Around 2012-13, the first competitor came around the scene and who was saying the same story that we were trying to say at the start of the business, which is, I'm low cost, I'm very transparent, I write blogs, I'm very active on social media, etc. And that's when we realized that you can't really build a business unless you have some kind of a moat, right? And so yeah, so that's I got extremely lucky in finding Kailash, who heads our tech, in 2013. So he joined us in 2013, and around him is where we started building our products, right? And when we started building the products, the big challenge for us was our bread butter jam comes from very active traders, right? And very active traders require all these bells and whistles on the platform. But we knew that the very active trading community in India isn't as big. So we knew that we also had to build the investing audience. So when we started building the platform, the big challenge for us was that you had to keep it simple, which can attract first-time investors, but we also had to give everything under the sun, which active traders required. Right? And building that together was actually one of the toughest things to do. I have friends who run different kind of businesses, and there's a really close friend who's tried to run a broking business and he's just quit and doing something else. And I think broking is one of the most complex businesses out there to build, and it makes it even more complex because you can't afford downtimes, right? As in, I don't think any other, potentially any other online tech business could be down for a bit and still be all right. Right? If we are down for 2 minutes, we'll be trending on Twitter, right? So in 2015, what happened is once we put out our platform and we had become decent size in 2015, we realized that the way we were trying to solve the problem in the capital markets in India was that we said, if someone has an intent to execute, we want to offer a great platform. If someone has an intent to learn, we want to offer a great platform. So Varsity is one of the largest, biggest education initiatives in the world. But then we realized that that's not enough, right? As in, people need niche user experiences. So in 2016, we launched this thing which we called as broking as a service. So what we did was we said that we have already solved the problem of execution. We today offer trading at almost zero cost. So there is no point in another startup coming and building again, right? So we said, we have solved for this problem. Why don't we invited startups to come build along us and try to solve the bigger problem. The bigger problem to solve in this country is to grow the capital market ecosystem. So we call this as broking as a service, and we opened up APIs to all aspects of our business, right from onboarding to trading to data to everything, right? So think of us as Android and the Play Store, and think of all these startups as Play Store apps, right? And I think we were the first guys to do anything like this across the world. And what we also realized is once these startups came to us, we realized that they also needed some help in terms of some money. So we started investing into the startups under the Rainmatter, the fund structure. And we also realized that in the business of money, credibility is important. You can have greatest tech in the world, but people don't trust you with money very easily, right? And that's one of the moats that incumbents have, right? As in, the banks enjoy today, some of the largest banks enjoy that moat that of trust, right? The trust and credibility takes time to build. And that's where a lot of fintechs today struggle, right? Because today I might have the greatest product, but will someone come put his hard-earned savings into your platform? Will he trust you overnight? It won't, right? People have seen our growth over the last 3-4 years, but we've struggled for 7-8 years before that. I for the first 2 years, I've gone picked up account opening forms. I don't know how many account opening forms, right? I've cold called on the phone, etc. So it's not an overnight thing. It's taken us a long while. And when we went to the startups, we said that you don't have to go build that credibility. We have already built it as a brand. Why don't you come build on top of us, and we will give you some of that credibility. And the APIs were called as Kite Connect APIs. And today, a lot of brokers have almost offer similar APIs for other startups to come build on top of us. But us doing it in 2016 enabled a bunch of new kind of experiences that India had never seen, right? And which is I think also helped expand the markets in this country today. I think, until now, what we have done is we have solved the problem of execution and education. But I think I know that is not enough, right? As in, I think what people need is they also need help when they're investing and trading in the markets, right? Because investing and trading is complex, and people keep doing mistakes. And I think it's almost like a fiduciary responsibility for a broking firm to ensure that he can do whatever possible to reduce those mistakes. So the next big thing that we are trying to do as a business is this platform called Nudge. What Nudge does is essentially it's almost like an assistant on top of a trading platform. The thing is, to trade, invest in the markets, you have to follow 5 or 6 very fundamental rules, right? Things like don't go against the trend, don't put all your eggs in one basket, right? If you go against the trend, don't trade with too much money, etc. Right? So what we said is that, can we incorporate all of these rules as an engine, as a layer on top of our platform? So when customers make a mistake, can we alert them? Just to give you an example, this year when there was a rush of new accounts in March and April, what we realized was we saw penny stock volume suddenly pick up significantly, right? So what we did on Nudge is that we put this alert saying, when someone tries to buy a penny stock at Zerodha today, we almost scare the shit out of the customer. We say, you can lose entire money on this, right? And if the customer still wants to override that nudge and go ahead and buy a penny stock, he has to install a TOTP app. So we have slowed that process completely down. And what we've seen is that our trading volumes are down, penny stock trading volumes are down 70%, before that nudge and post the nudge, right? So the fact that we could actually make that kind of a behavior change in the user and nudge him towards doing the right thing is what is like the most exciting thing today. So the next big thing for us as a business is to see if we can, I mean, we can't block out customers because, customers need to have the freedom to do whatever they want to, but at least we need to make sure the customer is informed when he's making a mistake, right? And we've gone one step ahead. So what we are also building is, anytime someone overrides a rule, we catch a P&L to it, right? So we can go back to the customer and say, you know what, you overrode, you had done an override of a very basic fundamental rule of trading and investing, and this is how much loss happened because of that, right? So because people understand losses more than anything else, right? So once he, the idea here is that can we show him a loss, and the next time he's alerted on a rule being broken, he doesn't break it, right? So yeah, so that's like the next big thing for us, which is to see if we can help customers when they're trading, investing, help them do that better.
Thank you, Nitin. I'll come back to you with the questions once I let Paresh get onto the forum. And Paresh, I would like you to talk about, from the exchange perspective, what kind of technology changes are happening, whether it is global or it is India, and how are you going to encourage people like Nitin to collaborate with the exchanges and take this innovation drive forward?
Yep. Okay. Thank you, Murli, and thank you, my fellow panelists, Nitin and Sankey. And I first of all, I want to thank NISM and NSEIT for actually, launching this wonderful concept, CapTech, and also the audience who are virtually present today. Let me begin with, Murli, with some key drivers that for digital transformation, that is the Indian capital markets, globally as well as Indian capital markets, commodity markets, basically MIIs are basically, going through. These drivers are basically, if you see the revenue pressure, the pressure for business growth, operational inefficiencies across the organization, the regulatory compliance, more and more regulatory compliance needs, it is coming up. Cyber security threat, I think everybody is aware that after the pandemic started and when work from home became a new normal, we had to all work from home, and then cyber security also, it increased in manifold. So that threats is there. And the last, not but the least, is the evolving digital ecosystem. That is where whole the story started with SMAC, and then when every industry segment has started adopting it, and that is where all these innovations have started, and etc. So the digital ecosystem, whether it is big data analytics, AI, ML, or blockchain, or even IoTs, all these things were taken up. So I'll basically give a very quick information about what exchange as well as the brokerage spaces. I know Nitin has already spoken about how the way they have transformed the entire the way the broking is done, but all other entire ecosystem, how they are doing. As you know, exchange and as well as brokerage business, that entire ecosystem, we deal with a huge and massive volume of data, and with volume, it is the velocity as well as the variety of data, structured, unstructured, and etc. and all that. Then what happened? After that, what happens with this data? So we have to get enhanced insights. We have to get data-driven decision making, and that is what the exchanges have adopted, and as well as even brokerage community has adopted. Just how we can take data-driven decision making process, how to make use or generate real-time analytics, predictive analytics, as well as go into operational efficiency part of it, which I said that one of the key drivers. Now, what happens is that in our total operation, how optimally it can be used, understand that areas of improvement and etc. All these things it can throw some light. Regulatory compliance is basically monitoring risk, monitoring surveillance mechanisms, and this surveillance mechanism has become much more intelligent nowadays. And with data, definitely there can be a sea change in terms of regulatory reportings as well as fraud detections and things like that, or any other anomaly that we see while doing the surveillance. Now, AI/ML, that is when AML steps in. that is what potentially, this has got a huge potential, especially for the exchange as well as for the brokerage community. One is that how we can make the surveillance proactive. For example, today rule-based alert management is a unmanageable volume of data. Now this is nothing like a white noise. Now, unless we take it out and we do a very precise, do the hidden insight, then this problem will be there. So that is where machine learning, that is deep learning, using the larger set of data sets, trying to take out the hidden anomalies and etc. As well as we can basically talk about the transfer learning, supervised learning, and etc. All these things are being used. In fact, algorithmic and non-algorithmic trading also, a lot of exchanges have started working in the identifying outliers and basically assisting investigation, then monitoring order and trades, which basically, whether any anomalous behavior is there, as well as basically time series visuals, generating time series visuals based on behavioral analysis of the clients and etc. or members. That has been already taken care of. Brokerage spaces have seen, thanks to regulator, there is a there is a quarterly basis reporting of AI ML implementation at the brokerage place, and we see a huge amount of new generation systems are coming up, and I'm sure more and more fintech and other startups coming in can really add value to this. Whether it is predicting possibility of churn out, whether sentiment analysis, and whether it is order execution, advisory services, etc., we can talk about. In sentiment analysis for investment strategy decision, all these decisions, and as Nitin was talking about nudging advisory and etc. So these are the things are need of the day, need of the hour. So that is what we can basically do a lot of work. And NLP also is being heavily used for taking the text data and interpreting it for a actionable intelligence going forward. Now, next comes the DLT. This is the most important part of the whole digital disruption. I think blockchain DLT is going to change the way the business is being done today. It's due to its speed, security, and trust. Again, I'm talking about, Nitin was telling that you need to have credibility and trust. And this technology is basically gives you the trust for the financial transactions. And this is the biggest disruptor is going to change, whether it is in settlement systems, post-trade system automating, even tracking of precision machine metal like gold and silver. There are a lot of use cases that is being done currently. EKYC is, of course, has been being done for a long time. Now comes to the IoTs. I come from commodity exchange. Now, commodity exchange, especially the clearing corporation, has to deal with warehouses, vaults, and etc. and all that. And if you know that they are at a very remote locations, they're all human dependent, and it takes a huge amount of time, turnaround time. Now, to reduce this, and now that internet, thanks to Government of India's Digital India Mission, the internet is reaching to the farthest corner of the country. So what we have to basically make use of it, engage those innovators, use the IoTs so that the warehouse operations as well as vaults and etc. can be made, monitor, manage, can be made seamless, and the turnaround time and everything can be, or speed or energy agility can be there. So talking about this technology, definitely at the exchange space as well as the whole ecosystem, people are using it. But what I feel that for digital transformation, we need innovators. We need innovators to be brought in to, as you said, it is step change. I think it has to be leap jump, because that is what the global exchanges have already done it. They are doing it. So to reduce manual operation, then provide data on demand for data decision making, because all these enablers, if we try to innovate it internally, definitely it will be taking time because of our priorities. So fintech innovation or startups innovation can do this thing. Then launch digital products, access to global exchanges, collaborating and etc. And then enhance market surveillance. So these are the areas where all this technology or digital disruption technology is being used, and all exchanges trying to see how they can make use of this, best use of this to deliver to their customers. Thank you, Murli. Over to you.
Thank you, Paresh. Let me first go to Shankarshan. Shanki, you are in a bank today, and you are also trying to position the bank as a digital bank. What kind of collaborations bank can do with brokers and fintech companies in bringing out innovation in this space? Is there thinking going on in the banking sector? What kind of collaboration that can be done with the brokerage and the fintech industry? Number two, I want to give you one more question. How are the incumbents responding to the threat of fintech? Are they willing to collaborate? Are they willing to partner? Or they are not interested in working with them and they are building it on their own? Since you have seen both the sides, I'm putting this tough question to you instead of putting it to Nitin.
So I'll start with the second one first. Fintechs, the first reaction of the incumbents was to deny that fintechs should exist. That those innovations are not necessary, they are not useful. That was the first reaction. I'm sure Nitin has faced a lot of it. Okay, we don't need all this fancy stuff. And banks used to be very hostile. I used to be in e-commerce. All banks said e-commerce can't exist. We will not give you a payment gateway. We had to beg from bank to bank to bank. Finally, HSBC gave us a terminal saying, okay, we don't know. We had one batchmate in HSBC. He said, "Okay, I'll try it out." But the standard reaction of incumbents to innovation generally is to deny that the innovation is required at all. And we are out of that phase. We have now realized that because the market is changing so fast, that innovation is not only required, it is eating away at some of the parts of the business that we did not think was our business. So for a long time, banks did not think payments was their business. They thought payments was somebody else's business. It was a side activity. The main business of banks was not payments. So it started, of course, with in the US with PayPal. PayPal started eating away at the fees that banks used to charge for making payments. They made it a lot cheaper and far more convenient. And suddenly they were a $14 billion economy, $14 billion that otherwise would have gone to the banks. Then Alibaba in the US, Alipay became this big thing. In India, Paytm became this big thing. And now it is PhonePe and Google Pay. Now, all these are services that if PhonePe, Google Pay did not exist, banks would love to provide. So we soon realized that ignoring fintechs is no longer effective. So our next step was to try and compete with them. And initially, and I was in Accenture at that time, we encouraged a lot of banks to compete with PhonePe. I helped launch SBI Buddy. We had a lot of these initiatives where we encouraged banks to become another Paytm, become another PhonePe. And it turned out to be far more difficult, partly because of cultural reasons, because banks are used to used to running steady businesses. They're not used to running agile businesses. They're not used to taking the kind of risks that a startup needs to take. They are not agile in shifting where the direction changes. And because it's a fintech, because it's a new field, the direction is not steady. You will not know exactly what you're supposed to do for the next 10 years. And therefore banks struggle. So as you can see, none of the bank wallets have really become successful. Banks tried building it, they tried buying it, but none of those really became successful. So then finally, I think now most banks have come down to cooperation. We provide the backend, the fintechs do all the experimentation. That seems to be not only in India, but even globally, a better way to go. Some independent fintechs have become successful, but most have decided to partner with banks. And in fact, Ant Financial is the best example. They started being an independent financial entity and eventually said, no, the actual money part we leave to the banks. We will provide the customer experience, the analytics, the risk management, but then we will transfer the lead to the bank so that the bank deals with the actual money. And Ant Financial, therefore, was able to explode. That is a model that a lot of other people have followed to a great deal of success. And that is the model that we at RBL are also trying to enable. We encourage partners to come to us and say, I have a new lending model. I have a new way to understand risk. I have a new brokerage model. I have a new model for evaluating personal loans. And I'm happy to do that. I'm happy to provide the APIs that allow them to actually move the money in and out without understanding or trying to figure out how to do the analytics, how to do the risk modeling, how to identify the customers, how to service the customers. And this has allowed both of us to flourish. It has allowed the Razorpays of the world and the Paytms of the world and the lending trees of the world to flourish. It has also allowed the banks to flourish. And both sides have therefore played to their strengths. In the UK also, which was a very rich fintech economy, something similar has happened. Many of the innovators, people like Tide, have tied up with banks in the back end. Metro Bank is Tide's back end bank. And they provide innovative services. Or Apple Pay, for instance, is tied up with JP Morgan, Goldman Sachs. They provide the front end consumer experience, which is often far superior to what a bank can provide. And the banks continue to provide what they are good at, which is money management and handling of risk. On the brokerage space, banks have increasingly started getting into, banks used to think we are the savings vehicle. We used to compete with capital markets. If you want to be non-risky or low risk, you come and save in a bank. If you want to be high risk, go and save in the capital markets. And for a long time, that was how the universe was. Banks discouraged people from doing capital markets discouraged people from doing banks, saying this is the advantage of each. Increasingly, this boundary has melded. So, for instance, ASBA was a good innovation, that you are allowed to invest in IPOs without actually having to move money out, because the money may not actually be required. So therefore, why lose the use of that money for 45 days or 15 days? Now it's a much shorter time, but it used to be a fairly long time. So therefore, why move money out if you want to invest in an IPO? That may not happen. And so ASBA was a great innovation. But ASBA was limited to the bank's own brokerages. Then it became a little more widespread. We started participating in the ASBA as a whole, using the payment infrastructure of the nation. And so now it has become a lot easier for people to invest in IPOs because banks innovated and allowed people to allocate the money without moving the money. Then things like dividend mandates have made it a lot easier for banks, for individuals to invest in dividend handling shares. There is a lot of other innovation that we are working on, which makes it easier to invest and easier to get the benefits of investment. So for instance, financial allocation strategies, if you go to a brokerage, he will give you allocation strategies based on the products he offers. Similarly, if you come to a bank, typically they would have given you allocation strategies based on the products that we offer. Now you are able to give a much broader range of financial allocation strategies. The nudges that Nitin talks about become much richer if you are able to combine banking and the inflows, the knowledge of the inflows, with the risk profile that he is willing to take and with the risk profile of the shares that he's willing to invest in. Now, as a banker, I know much better what a person's financial position or cash flow position is. So I'm much better able to advise him on what kind of risk he's able to take. If he's a 75-year-old with a very large cash position, then actually, he can take a lot of risk because his chances of losing money may be high, but he has a lot of money to lose and no future investments to do it in. Similarly, so there are all kinds of combinations that a bank can do with the additional information that it has in the system that a brokerage or a capital market cannot do. And that is what we've started partnering in various ways. Giving people cash flow based analytics of risk, giving people ideas of their loan return performance, giving people ideas of potential milestone payments. I must say this is at an infancy. Our current engagement is not particularly rich, and I think that this will only get richer. Eventually, Nitin will figure out how to make much better use of banking data. Today, I must say, it is still at its infancy. They are two separate worlds at the moment. Even within a bank, they are separate worlds.
One follow-up question on this particular item. With the account aggregators coming in and with a wealth manager who can take it as an account aggregator from all the data, can this be an opportunity for the bank as well as brokerage and the wealth managers to integrate all these things to give a bouquet of services to all your banking customers?
So I suspect that is the opportunity the account aggregators are looking at, the ability to aggregate accounts and then use this knowledge across multiple kinds of accounts to make much better automated financial decisions. I think that's the opportunity that they're looking at as the way to do. Now, I don't think it's an easy thing to do, which is why risk capital is coming in into it. But definitely, the technology is maturing. Open banking APIs are opening up. There are laws that are supporting this exchange, and therefore, I do see that as an upcoming field. And I do see a lot of action there from various companies that have raised money in the market, trying to get into this aggregator space.
Thank you, Shanky. I'll move on to Nitin, and I'll come back to you for the second round of questions. Nitin, you have done something different from what the conventional brokers have done and the conventional incumbents are doing. How do you see the other brokers or other ecosystems adapting? And do you see them, start running with you quickly, or it is going to be 2 years, 3 years, behind what you are today? That's question number one. Question number two, I am very happy about your nudge. I saw your nudge message on Lakshmi Vilas Bank advising people when the DBS was happening, and that was a very good initiative from you. But you as an ecosystem is becoming large, and there is a large community with a differential varieties are working on your ecosystem. And there are risks associated with this in terms of technology, in terms of people misusing this, and what kind of thinking going on in your ecosystem to address these kind of new risks which is going to be coming into the marketplace. These are the two questions I would like to hear from you.
Sure. No, firstly about like what I think about the brokerage industry. I think there is while we are solving the problem of execution, like I said earlier, right? I think the real problem to solve in India is really not just execution. I don't think India needs another buy sell button with the low brokerage and charts and all of that. I mean, I think what India needs today is, I think, advisory first brokers, right? People, who advise customers with no conflict of interest. The problem today in this business is there is a large conflict of interest. A person advising makes money from a transaction, right? And I think that has to move away from making money from the transaction versus, like a fees based on result, right? Then you know that the advisor is going to do the right things for the customer, right? I think, brokers have two options, either be tech first or take the advisory route, right? I mean, you can't be in between, because, if you're going to be in between, I think, you're going to lose that race. Right now, people who want to be tech first, can you be a tech first platform using a vendor? I don't think so. Right? I mean, you can't call yourself a technology first broker if you're going to go outsource your tech to someone. I mean, tech doesn't unfortunately work that way, right? So to build a tech first platform, you need tech first, good technologists to be working with you, right? And you need to be agile. You need to be, I think in today's world, you need to be open source. I think you need a bunch of that skill set, right? So while a lot of traditional players are trying to catch up in terms of tech, I don't think the approach is right. I don't think going and getting a guy to make a good looking buy sell button doesn't mean it's great technology, right? So I think what brokers in India should do, who have been around for a while, the skills lie around advisory, right? And I think the focus should be to go build that advisory kind of a business, right? Otherwise, in this tech first kind of a business, I don't think there's a space for more than 2 or 3 brokers, right? Because the margins are so less, the markets in India are so shallow for people who have an intent to trade or invest, right? As in, so I think brokers have to kind of choose one of these things. I think what has happened, I think this month is quite interesting, right? As in, one of the tools in which I think a lot of brokers used to attract customers was by giving higher intraday leverages and all of that, right? And from December 1st, that whole peak margin, thing got introduced. So all brokers now are on a level playing field in terms of intraday leverages. And I think the first reaction has been that the pricing has dropped across all brokers, right? Because now you can't really attract customers by that higher leverage. So I think some of these things that SEBI is doing, I mean, it hurts us, as in if you have lesser intraday leverage, we lose. I think our revenues will be down 20-30% because of this. But it kind of is good for the ecosystem as a whole, because the lesser the risk, the for the broker, for the customer, the better it is, right? So yeah, so I think that I hope one of the things that I hope is that SEBI makes it easy for consolidation and merger between brokers, because I don't think there is space for 400, 500 retail brokers in this country, and I think the space is only for maybe 40 or 50, right? So today I think it's very tough. Even if brokers merge, you have to re-onboard the customer and all of that. So I don't see how that's going to happen. Now, the second question that you asked me about the risk. See, the thing is, I think in when you're running a broking business, there are two types of risks, right? One is risk in terms of customer interest being compromised, and this typically happens when you have people mis-selling, right? I mean, if you look back on the history of broking industry in this country, most issues have happened when people have missold, right? As in, missold high returns with low, saying it's high returns and low risk, but whereas it wasn't. It was high returns, high risk, but someone sold the customer high returns, low risk. Or it is when employees at the broker to generate, to meet some target, churn the portfolio too many times, and etc. Right? I mean, this is one of the big risks that exists in this industry. And it doesn't exist at Zerodha because not a single person on our team has a revenue target. We don't advise our customers, right? So there is, like I said, right, not one person in the office has any incentive, related to the revenue of the business, right? So by doing this, what we have ensured is that there's no mis-selling at all, right? As in, because people mis-sell only if you pressure people into selling something, right? As in, we don't really. The only thing we sell, our sales team sells, is account opening, right, and nothing else at all, right? So that risk is taken care of. So when we talk about nudge and we talk about all of these things, each of the nudge that we will add will reduce revenue for the business. It will never add revenue to the business, right? So for example, any nudge that we are planning to do is essentially going to tell the customer either don't trade or trade lesser, right? So when I said penny stock trading volumes dropped by 60-70%, we actually lost a lot of revenue on that business, right? But we are okay to let go of that revenue because we understand that it isn't about making, trying to make all the money out of customer in a short period of time. It's about keeping the customer active and trading and profitable for longer periods of time, right? So even if, because that's when the ecosystem will grow. I think one of the main reasons I think why Indian capital market ecosystem hasn't grown in terms of participation is because people come with wrong expectations. They're missold. They're extremely aggressive. They trade. They lose money. If they lose money, they'll go tell their friends and family, don't come to the markets, right? So one person losing money is equal to maybe at least 100 people not ever coming to the stock markets, right? So we need to stop that from happening, right? And so that's about this. And now in terms of technology, of course, I mean, as you get bigger, in terms of the kind of scale you handle in terms of tech, the impact if there was a technology issue is higher, right? For example, if say our charts, right, on our trading platform, if our chart doesn't open for like on 4-5 minutes, chart has nothing to do with trading, right? I mean, it's just like an analytical thing. We will be trending on Twitter, right? So it's an impact of being such a large broker in this country, and majority of our customers are 28. I mean, the average age of a customer is 28 years. So these guys are very active on social media, right? So before they complain us, they're actually complaining on social media, right? As in that's the behavior of today, the crowd that we cater to. I mean, social media has helped us grow. We have grown the business till now without spending a single rupee on advertisement. But social media is also a double-edged sword, right? As in it's something, even small issues can kind of, snowball into something else. So on the tech side, is where handling the scale is actually the real challenge, and I think that's where our tech team has done a great job. Today, we process between 5 to 7 million trades a day. Right, at 5 to 7 million trades a day, we are probably one of the largest. I mean, we are the largest broker in the world, because the largest brokers in the US do between 3 to 4 million trades a day. Right now, and in the US, it's technologically it's easier because when a broker receives the order flow, he can send it to the exchange, he can send it to high frequency trading desk, he can match it himself, right? So there are multiple ways in which a person can handle the order flow in the US, right? In India, it's not, right? As in, so when an order comes to us, we have to connect to the exchanges, and we have to connect to the exchanges via the lease lines, via the, right? So there is external dependencies. I think we are, I have no doubts that India is probably the safest place in the world for retail investors, because their interests are covered because of our depository systems, because of the way the exchange order matching happens, etc. But it also exposes us, in terms of risk, into all these external dependencies, right? So if a lease line, is flapping, the weirdest thing that happens is flapping, right? It doesn't go down, right? It flaps, right? And when it flaps, uh, we don't know if it's down or not, right? And if any orders are placed during that time, uh, the status says pending, right? So those kind of issues starts becoming bigger when you are a bigger uh, piece of the market, right? I don't think there's any getting away from it. I mean, the way we are trying to look at all of this is that every morning we get up and say that we have to improve our tech. Kite, which is a web version, in the last uh, 2015 is when we launched it. It is 2020. It's actually the fourth version of Kite that we're going to be launching soon. Like when I say fourth version, we actually killed it and we have built the fourth Kite platform, right? As in, it's built grounds up, right? So now if you go back and look at one of the incumbent guys and look at the platform from 15 years back, you'll probably look at it and it'll almost be the same platform they were using 15 years back, right? And we have in the 5 years let go of it 4 different times, right? So we are constantly, trying to improve every single thing. We're probably the fastest platform in the country by far, right? So everything that can be improved, we get up every morning and say we should go ahead and improve it, make it, uh, you know, we always keep the customer interest. I mean, I know everyone will say it, but but we've always kept the customer interest in mind first. So if there is something that can improve the performance of the platform, we do it without ever considering revenue and all of that. Like as I said, this tech, I don't know if there is a way, as the dependencies on technologies keep getting bigger, the risks also keep getting bigger there, right? As in, not just for us, it's for everyone, right? I mean, it's for NSE, it is for MCX, it's for everyone, right? So like, and there is no tech platform in the world that can say that I'm up 100% of the time. It's impossible. I mean, Google was down for so long, Amazon was down for so long, Facebook was down. I mean, these are, what, $500 billion companies, right? So it's, yeah. And in our business, unfortunately, if you're down, you get screwed and you get crucified almost. So we learn and we keep improving every day, I guess. That's how we are looking at it.
See, nobody else can understand your pain more than me, because I've lived with this ecosystem for almost 20 years, and keeping it up 100% is a real challenge. I'll go on to Paresh for a quick question and then come back to you people, because I have two other questions before I close this session. Paresh, now people are talking about fully digital bank, fully digital exchanges, end-to-end straight-through processing. That is a kind of disruptions what the world is talking about. What is your view on this in terms of fully digital exchange? Today, we talk about Nitin's innovations in this. Now, the world is talking that the digital banking is there is no intermediaries, there is nothing, and you go straight through the exchange and start trading it. There could be platforms like Zerodha who can facilitate that, but it's just a pass through. If that is the kind of transformation which is taking place in other part of the world, what is your view on Indian market, and how do you see that?
See, Murli, as per global trend, whatever we see, it's purely going by the global trend. This disruption had to happen, and it is going to happen. That is a digital exchange. It is going to be. That is what a lot of buzz is there. People are talking about it. Now, digital exchange means direct contact with the exchange by the customer. The business model has to change, so that is the way it is. In all other business area, the business model has changed because of the disruptive technology. So let us watch out for it. Let us not be, definitely India cannot be outside of this kind of trends that globally being talked about. I think we have to wait and watch and take preparations rather also maybe, to see how that kind of disruption is going to hit going forward. Because all the technologies are actually bringing that kind of indications. And global trend is also talking about that.
A quick question. I'm just combining the participant question along with this.
Mm-hmm.
With the increase in efficiency brought in by technology, there is a cybersecurity risk which is coming along with that.
Right.
I'm putting it to all the panelists, and it is going to be a rapid fire session, and I want you to keep it very short. Are financial institutions prepared to take such risk, and are they prepared for such disruptions? That's the question from an audience. Nitin, Shankar, you can, any one of you can take this. Shankar, I think Shanky, you're better suited to, because you have seen the financial institutions and other things. You can start, and Nitin can supplement that.
So it's a good question. Are we prepared to, or are we, well, to a certain extent, financial institutions in India today are going through two large changes. One is the customer has become, India is one of the most digitally savvy economies in the world. And a large part of that is due to this broadband and mobile revolution driven by cricket. We have become very large users of digital smartphones because of the explosion of people watching cricket on phones and, driven by Hotstar. Now, cricket has led many other innovations. This is one of them. Because of that, lots of people have become digitally savvy. You see a very large WhatsApp usage. You see very large video consumption. And cricket is not the only thing. I mean, in general, we are one of the largest consumers of YouTube, for instance. So entertainment and social interactions have made a very large chunk of our population digitally savvy. There is, of course, a large chunk that is not digitally savvy, that is still on 2G, that does not have access to smartphones. But the part that does have access is one of the world's largest chunks. It's more than 400 million people. Therefore, we have been forced as banks, as financial institutions, to become far more digitally savvy. Like Nitin says, the standard way to complain, and not just to Nitin, even to things like passport problems, the standard way to complain is Twitter. So it has, this kind of transformation has happened, and we are therefore forced to respond to it. So all banks, all financial institutions have in the last 5 years become far more digitally savvy than they were, for the entire rest of their lifetimes. Most banks would ignore mobile banking to the point where they would say, if you wanted a mobile banking, you would have to come to our branch and submit a form. And then we would think about whether we'll give you mobile banking. If you applied and you got approved, then we would give you mobile banking. Now all that is gone. Mobile banking is the primary mode. Now, along with mobile banking comes the fact that you need things real time. You're not going to wait around. It's not that apply and wait mentality anymore. Just like, you want trading in real time, you also want banking in real time. And of course, the government has helped a lot in the payments infrastructure being real time. Now, the last one, RTGS, is becoming real time soon. So this will lead to another round of innovation where people change their business models to be real time friendly. Things that could not exist before because payments were not real time will suddenly start becoming. So there will be services that flourish simply because you can get paid instantly, as opposed to 3 days later. And banks will be forced to respond to that and innovate and supply to that. That is how the situation is in today. It is a forced change to a certain extent.
Yes.
And it is irrevocable. And so banks have also therefore started hiring digital officers or people who know how to handle APIs and people who know how to handle real-time systems. Again, this is a change that's across the board. Even public sector banks, even relatively small rural banks are thinking of doing this.
Nitin, to you, on the security part of it, the kind of innovation, what kind of disruptions, kind of ecosystem, what you have created. Security is going to be the biggest threat for the market itself, because you are doing about 4 to 5 million trades, and that's going to be a biggest threat. That's the kind of question which has come in. What are you doing to address this?
Oh, see, firstly, just adding to the what Shanky was saying, I think in today's world it's about the fast beating the slow, and not the big beating the small. So and there is no status quo, right? As in everyone's going to get disrupted. So unless like every morning I get up thinking, who's going to disrupt me, and if I can, I can keep disrupting myself every day, right? I mean, that's essentially how I look at this. Uh, but in our business, risk is just not security; it's actually risk and security both are extremely important, right? As in, because you can't compromise on risk, because when there are 5 million trades happening, each of those, a lot of these trades are leverage trades, they're futures and options trades, right? And it's almost like giving 5 million loans in a day, right? So it's very important that you have your risk taken care as well. See, so I think the way to go about this is ensure there are best practices. Like I was saying, I think when it comes to security, I think open source is actually is a good idea, because if you're using open source components and they're constantly updated, uh, you're automatically getting updated, right? If you're built on FOSS, because most of everything that we use at Zerodha is FOSS. So we get to benefit with all the new technology innovations. You're not stuck into some enterprise old version of softwares and etc. Right? So we are constantly updated all the time. So maybe that's a great way to kind of make sure because the security issues are going to keep changing. They're evolving quite fast. So we need to, your systems also have to be evolving very fast. Now, in the broking business, I think the biggest security issue here is that a customer, when he withdraws money, can it go to the wrong account, right? I mean, that's really the big issue in our business, right? As in, because there's no other reason why someone would want to trade on someone else's account unless someone has to withdraw. So the biggest security issue in the broking business is a customer who has money lying in a broker's account withdraws money, but money, instead of going to that person's bank account, went to someone else's bank account, right? And that's really the biggest biggest security issue in the business. And we have just multiple checks and balances. We've gone to the extent where we've spoken to the bank saying if the accounts are not mapped to whatever these accounts, just reject those fund withdrawal outs. So those are some of the things that we keep doing.
Now, one more quick question. The tier 2, tier 3 cities, they are looking beyond FD goals and real estate.
Right.
You have invaded the millennial, you have invaded the Gen Y, Gen Z, and others. What can you do to widen this net, and what is that new thing that can happen in the market to reach out to this tier 2, and tier 3 people?
Right.
This question can be addressed by you as well as Shanky and Paresh.
Yeah. No, I mean, I can. This is something I breathe and smell. I mean, I eat every day, right? This is the question I ask myself every day. I think the right product isn't even equities actually. I think because I don't think the rest of India, outside the top 5 crore Indians, are even ready financially or intellectually or in terms of risk to handle the volatility of stocks. And I think the right product for them, we need to probably create a stepping stone in terms of a fixed income product, right? And then slowly nudge them towards equities, right? Because if you don't have savings, do you really want the person to be putting all his money into stocks and be exposed to the volatility of the market is a question, right? Because if you give him an exposure, he's going to stop doing it, right? As in, if say a person who earns 15,000 rupees a month, he has got he puts 15,000 rupees in say some stocks, and stocks are down say 10% in a month, he will stop coming back to the stock markets, right? So I think the right way to do it is take the 15,000 person, use fixed income instruments, and take him to a 50,000 rupee saving. Once he's got 50,000 rupees saving, maybe give him an exposure of 10,000 rupees to the stock markets, right? I think that's really the way to open up the markets. Now, what fixed income instrument? Ideally, it should have been a bank FD, but I don't think a bank FD is enough, right? Because one of the reasons people also try to invest and save is also greed, right? As in, people want to make more than what the bank is making and a bank is giving them. So we need to find like fixed income products which are kind of lower risk than stocks, but higher interest than bank fixed deposit rates. I mean, that's how we are thinking about this, especially of the the Bharat audience, as they call it. I mean, outside the top 5, top 5 crore.
Okay, in the interest of time, this is my last question. Other questions, whatever is there, my team will take it and reply to the audience. Now, We have seen, we have heard from yesterday that technology disruption and partnership collaboration is needed. In the real sense, in the Indian market, how do you see the partnership collaboration and fintechs along with the incumbents and the exchanges as well as regulators is happening? And all the three of you can spend 1 minute and in a short form, if you can give an answer, it will be very interesting for the participants. Shanky?
Sorry, I missed that question.
Everybody is talking about disruption. Everybody is talking about fintech partnerships and collaboration. What is happening with the incumbents and what is happening with the exchanges and what is happening with the regulators in encouraging this? Is it happening? Is collaboration and partnership is going to be the way forward? If I have to put it in a different form.
I must say, as I said, initially we were very hostile, but today it is definitely happening. And not only that, it does seem to be increasing. It seems to be becoming the norm. Today, a fintech finds it very easy to get an audience with us, with a bank. And, of course, it may not be possible always to work with every fintech, but there is a mechanism to approach us. We participate in hackathons, we sponsor events, we publish our APIs. And so I think the trend is clearly towards more cooperation rather than less. I don't think that will reverse.
Parish, will be very short, because I'm already past my time.
I know. Yeah, definitely, regulatory is also encouraging the fintechs and the startups to basically add value to the exchange ecosystem. And also by using technology, you can go to the rural and semi-rural areas. So all these things are taken care of. So there is a very, bright future for the Indian fintechs and startups. And regulator is definitely doing their part of it. And exchanges also have to really adopt the fintech innovations to basically be in the digital transformation. That is what is waiting for, or it has to enhance that area. Yep.
Nitin, be brief.
Sure. Yeah. So no, I think there is a lot happening, but I'll tell you the reason for success of Zerodha's partnership model, right? The reason for the Rainmatter initiative of ours was we didn't just give APIs or we didn't just give them funding, but we helped them solve the credibility issue, right? For every startup, the biggest issue is to get to the first 10,000 customers, right? Most startups never get there and they fail before. Startups with great products never get to the first 10,000 customers because they're never able to get over the credibility angle when it comes to money, right? So what we gave startups was credibility. Today, while there's a lot of things happening, a lot of people who are exposing APIs, even banks or whatever, right? I mean, they're doing it because they're expecting customers in return, right? But I think it has to be a two-way kind of relationship. I think banks also have to expose their customers to these products, right? As in, help solve the credibility angle that a lot of startups face today. The day it starts happening, I think there will be a lot more innovation, right? Because otherwise, on their own, a startup, nobody who's a startup who has no access to customers with the APIs can't really do too much unless he gets access to some customers as well.
Thank you so much. Thank you, Shanky. Thank you, Nitin. Thank you, Paresh, for joining. And it was very, very enriching. It's the name of the game is partnership. And we need to encourage fintechs and we need to give them credibility in terms of coming and delivering value to the ecosystem. That is what is coming out of the panel. And thank you again, all the three of you, for joining and giving such an expert view to the audience. Thank you. Over to you, Sheetal.
Thank you, everyone. I think it was a very nice and interesting session. Thank you, Shankar sir. Thank you, Nitin, and thank you, Paresh sir. I think this is what it is. It's not just technology. Technology is just an enabler. We need to really understand what market needs and collaborate further and see how the technology innovations can be, further enhanced and help us move forward.